Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Ekta Batra, and these are the top stories. 1:30 p.m. Midcaps in line with larger peers amid a volatile session. Market erases early gains. The Nifty is below 17,000.
Defense equipment makers like Hindustan Aeronautics and Bharat Forge fire up as the government clears projects worth over 70,000 crores. HAL bags a 32,000 crore project, while Bharat Forge gets a share of an over 8,000 crore order.
Morgan Stanley upgrades Cyient and LTI Mindtree to overweight, giving the mid-cap tech players a boost. Says the companies are better positioned than peers on margin levers.
Order updates drive gains in VA Tech Vibhag and RVNL. RVNL emerges as the lowest bidder for an 1,100 crore project, and 800 crore export order gives VA Tech Vibhag a fillip.
KPIT Tech gains on positive commentary after a mobility deal with Honda. Management tells CNBC-TV18 this tie-up is the largest engagement for software-defined mobility.
A very good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Ekta Batra. With me is Reema Tendulkar. Well, it's turning out to be a session where we are just about holding at around 17,000 for the Nifty and the Bank Nifty, which is down around 30-odd points. You'd have to say it's largely a consolidatory session, but we'll take it with both hands considering the kind of volatility that our markets have seen in the past couple of trading sessions. So it's turning out to be a session where the Nifty and the Sensex will go home with cuts on a week-to-date basis if things remain the same over the next 2 hours. But it's definitely a recovery on an intra-week basis.
Yes, but some disappointment, right? In the morning, we had that gap up opening. US markets, Wall Street closed with strength, gains of about 1.5% for the key indices. The Nifty went on to hit levels of 17,150. So from the top of the day, we have seen a fair amount of slip up, right? Close to about 150 points. The Nifty right now has managed to put its head above that 17,000 level. But from the day's high, which is nearly 17,150, we have seen a significant decline. So in that sense, it's a bit disappointing that the markets couldn't quite hold on to their gains, despite the precipitous fall that we've seen over the last many days. But let's get to our segment, Midcap Movers. We've got Vivek joining in to take us through the midcaps that are moving around in trade.
Well, good afternoon, and thank you so much for that. So what's actually happened is, as you mentioned, cool off from the top. But, select stocks, select pockets are doing quite well in today's trading session. First, we're looking at the chemical pack. So two stocks, Lakshmi Organic as well as Kiri Industries. After 7 to 8 straight sessions of losses, both of these stocks today have bounced back quite strongly with good volumes as well. KPIT Tech, after the management commentary on our channel, the stock is up almost 7% in today's trading session. Another interesting couple of stocks that are doing very well, both JBM Auto as well as Electra Green Tech. Now, analysts are reading that, the recent Maharashtra budget where there was a strong order possibility of EV buses coming in augur quite well for both these companies. Both of these stocks doing quite well in today's trading session. On the other hand, some of the other stocks that are doing well on very sharp volumes. Supreme Industries, it's an inclusion into the FTSE All Cap Index, so some pre-buying seeing there in today's trading session. Mrs. Spectors continues its up move for the second straight session on good volumes. JK Papers and BF Utilities too up on strong volumes. On the other hand, some of the stocks that are seeing quite a bit of a sell-off. Patanjali Food continues its downtick after yesterday's freeze as far as the promoter shares were concerned. ITC, seeing a bit of a sell-off today on the back of the fact that the BARF 22 ETF will lead to some outflows. Mahindra & Mahindra Financial and Zee Entertainment almost giving up most of the gains seen in yesterday's trading session.
Okay, all right, Vivek. Thanks very much for that. Well, some news coming in on Anand Raj, which is a real estate company. The board has approved allotment of around 200 crores in terms of debentures to Apollo Global in its first tranche. And remember that the BSE Realty Index in any case is doing well today. Anand Raj is up around 3-odd%. The BSE Realty Index itself is up around 2-odd%. Fairly resilient on a week-to-date basis as well, which has fallen around 0.7%. On a week-to-date basis, lesser in terms of cuts as compared to the Nifty. But let's welcome Himen Kapadia of KR Choksi Securities to discuss the technicals this Friday. Himen, hi, welcome to the show. Well, Nifty is holding above 17,000 at this point. The Bank Nifty also above 39,000. How would you qualify this week on a technical basis, and what would your positions be going into next week?
A very good afternoon to you, Ekta. Thank you for having me on the show. I believe a couple of things have happened. I think after the sell-off, TCS seems to have stabilized. I mean, these have significant market weightage, the entire IT sector looks oversold. Ekta. So some sort of a relief coming in. 16,800 has held. And okay, the gap up didn't sustain. I don't think the markets are in fine fettle for a gap up like this to sustain. But now we are stating some sort of comeback. Reliance went almost to 2,200. Reliance has stabilized. Sentiment wise, weighted wise. I mean, it is an extremely important stock. So I have a feeling IT and Reliance, which was slightly wobbly, seem to be showing the first signs of stability. Okay, the VIX is still at 15.5. Below 15 and 14 would give us some more confidence that this anticipated bounce is going to sustain. So I'd say fingers crossed. We are oversold, extremely oversold. We have come to support levels. We've come off significantly. Chances are we are setting the stage for a small bounce back. It's still too early to take the call. How much this is going to sustain, but the way I see it, yeah, there is some relief from the corner, and I believe IT and Reliance could be the stocks which could help in the market recovering some more from here.
Okay, and what about individual names, Heyman? What would you recommend?
Firstly, okay, both are contra buy calls, keeping in mind the market has come off significantly. So firstly, a buy call on ICICI Lombard. We saw an upward key reversal coming in yesterday. Some of the mechanical indicators are turning positive after reflecting some positive divergence. Crossover buys are coming in, so one can buy ICICI Lombard around 1070, stop loss 1055, target of 1100. Secondly, same logic, one can buy Aarti Industries. It's been moving sideways, showing first signs of life. Some of the oscillators have given a crossover buy. The stock looks set to overcome a small resistance supply line. So one can buy Aarti Industries at 528, stop loss 518, target for 548. Both are contra buy calls. We're playing for a bounce back, which I believe should happen with the market sort of leading.
Okay, all right, Heyman, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the technicals for the Bank Nifty, just about lower by around 20 odd points, a slight bit of an underperformance. But if you look at the PSU banks, that's down sharply on a week-to-date basis. The index is corrected around 6 odd %. Time for a short break, but on the other side, Midcap Spotlight segment, we will be focusing on a midcap that is gaining in trade today. Stay tuned. Welcome back. Well, let's concentrate on our segment Midcap Spotlight. We have Vivek who is joining in, and he's focusing on a stock, VA Tech Vibhag, which is buzzing on the back of an order win. Vivek.
Well, absolutely right. So, this particular stock is doing quite well in today's trading session. In fact, up for the second straight session. So what's actually happened is that the company is now foraying outside India in terms of the water sewage treatment operations that it has. So when you're talking about, today's order win, 800 crore order win that the company has got in Bangladesh. This particular order win is for development as well as operation and maintenance of a sewage water treatment plant having a capacity of 200 million liters per day. So the scope of the work involves, number one, installation of the entire facility as well as operation and maintenance for 5 years, for which the company will in totality receive 800 crores. Now, when you're talking about this particular funding that the project has, funding has been received from the World Bank as well as the Asian Infrastructure Investment Bank. Now, also just a couple of days ago on March 11th, the company had also intimated to the exchanges that it is making a complete exit from its Czech operations. And again, this has been another important trigger as far as the company is concerned because of the company's focus to go away from its non-core business areas.
Thank you very much for that, Vivek. Let's move on and talk about Jubilant Pharmova, which is in focus after Government of Canada approves a loan for the arm Jubilant Holisticity. Did I get it right?
Close to it. But nonetheless, the news is that their arm, Jubilant Holisticity, has received approval from the Government of Canada, and this is to provide a partially repayable loan, and this is via their Strategic Innovation Fund program. So this is a fund of around 108 million Canadian dollars, which will result in a capacity expansion at their Montreal manufacturing facility. Now, the loan is already in addition to a loan which was already committed by the province of Quebec for the same expansion project, which was worth around 25 million. Now, the expansion project is aimed at upgrading the company's Montreal facility and also to increase its fill and finish capacity by over 100%. So the stocks seems to be reacting to the fact that they have received an additional loan to go ahead with the capacity expansion which they've planned in Montreal. So that would definitely be a positive for Jubilant. Remember that there is an aim also to shift focus of manufacturing towards the US and Canada, more closer to their home countries, and hence maybe the street is also cheering the fact that Jubilant Pharmova would have some manufacturing element closer to the developed markets. Time for a short break, but up next we'll be diving deep into the dermatology space. Stay tuned.
Welcome back. The government will soon conduct a review of the PLI scheme. Sources tell CNBC-TV18 the government wants to review the eligibility criteria for some of the PLI schemes to see if the terms are constraining investments. Parikshit joins in with the details. Parikshit.
Well, yes, an interministerial review of PLI schemes across 14 sectors is underway in the government right now. And there have been some concerns that despite these big PLI outlays, investments on the ground, capacity building on the ground has not really taken off. So the government wants to see whether the price caps that are there in certain schemes, such as the electric vehicle or the PLI for advanced automotive vehicles and components. So according to that, incentives are given for vehicles which cost 1.5 lakh rupees, for example, for a two-wheeler. So they want to see whether these price caps are actually constraining manufacturing. Also in the mobile phone sector, incentives are only available for manufacturing of mobile phones for 15,000 rupees and above. So the government wants to see whether there needs to be an incentive cap or a price cap, and how this should be structured so that manufacturing is not hampered. At the same time, whether investment targets in some of the schemes are too unrealistic. For example, in the scheme for vehicles and components, and a vehicle manufacturer has to make an investment of 2,000 rupees over 5 years to avail of incentives on the scheme, and also have 3,000 rupees in investments in fixed assets before qualifying for this scheme as well. So the government wants to review whether many of the bigger players, many of the genuine players have been left out of the scheme as well. Then there is also a concern about whether there is something missing in the PLI scheme, because they have been seeing how in the battery manufacturing segment, there are many OEMs who have not availed of incentives, not participated in the ACC PLI scheme, but they're independently setting up operations, investing in capacity building in India. So a thorough review of the PLI scheme is expected over the next few weeks.
Thank you very much for that. Let's move on and talk about the pharmaceutical space. Now, dermatology is one sector which has seen quite a few mergers and acquisitions in the recent times. Ekta is here, standing by at the big wall to give us a deep dive into the dermat space. Ekta.
Well, Eris Life has acquired 9 dermatology brands from Dr. Reddy's for 275 crores. This is the third acquisition in less than a year in the Indian dermatology space for the company, after the company picked up Mumbai-based Oaknet Healthcare for around 650 crores in May 2022 and 9 dermatology brands from Glenmark in January of this year, shelling out over 1,200 crores for all 3 buys. And it's not just Eris. Last year, Torrent Pharma spent around 2,000 crores picking up 100% stake in PE-backed India-focused Curatio Pharma, and JB Chemicals acquired a nappy rash cream along with 3 other pediatric brands from Dr. Reddy's for close to 100 crores. So let's learn more about the dermatology segment in India. Dermatology in India is broken up largely into 2 segments, medical and cosmetic dermatology, with the total size of the dermatology market estimated to be over 11,500 odd crores. However, the overall segment is still small, with just around 6 to 7% of share of the Indian pharma market, compared to, say, anti-infectives, which is around 12 to 13%, or cardiology, which is around 13 odd %. The dermatology segment, it seems, has picked up pace post-COVID-19. For example, in 8 quarters tracked from December 2020 to September 2022, the dermatology segment has grown in 7 out of these 8 quarters, tracked and in double digits in 5 of the 8 quarters. Now, most recently, as per industry data, the segment grew around 10% in the month of January, followed up with an 11.8% growth in the month of Feb. Companies have paid anywhere between 3.9 to over 8 times sales for these acquisitions. So why are companies paying top dollar for these brands and portfolios? Now, analysts are pegging the dermatology segment itself to grow at around 10 to 12% annually on a sustainable basis. And while medical dermatology is bulk of the market, both medical and cosmetic dermatology are expected to be growing due to factors such as more medical awareness, insurance penetration, and a need to cater to what are lifestyle-related therapies for chronic and subchronic dermatology conditions. The interest across medical and cosmetic dermatology can be seen in the portfolios picked up. For example, Eris, which now gets over 13% of sales from dermatology, will have brands such as Cosvate and Cospilite from Oaknet to help to cater to the medical dermatology segment, and moisturizing body and face wash from Dr. Reddy's as well. While Curatio Pharma, which grew around 25% in FY22 and gets 75% of sales from the top 10 brands, will provide Torrent Pharma products ranging from baby shampoo and cream to prescription creams to treat scabies. The fear is high spend, however, on sales and promotions, which could eventually impact margins of these companies going forward.
Ekta, thank you very much for that very interesting analysis and a very comprehensive review of the dermatology market in India. By the way, for the markets, it's picked up substantially. When we started the show, the Nifty was hovering around 17,000, struggling, blinking red and green. But in the last 30 minutes, markets have picked up 0.5% now on the benchmark indices. And a stock that we'd like to talk about, KPIT Tech, that's at 6.5% today. This year, it's rallied 23% at a time when the Nifty IT index is only up 1.5%. So big outperformance, and the stock is now at a fresh lifetime high. As we wrap up on the show, we leave you with commentary coming in from Kishore Patil, the co-founder, MD, CEO of KPIT Technology, on their latest partnership with Honda.
We have been working with Honda for last 6-7 years. And basically, we have been involved in terms of working on projects and programs in different areas, including autonomous, etc., connected infotainment, etc. So here, when, as we call, all the OEMs are moving towards software-defined vehicles, or as Honda calls it, software-defined mobility. This program was being undertaken by Honda. They thought that they would need a partner, kind of a long-term partner. They need to make software-defined mobility as a success for Honda. There is no numbers attached to the deal. This is a long-term deal, but I may just, I have said that it's basically 2,000 people plus relationship by 2030. This year, we were expecting about 900 plus engagement. This includes some of the current engagements we have,